Welcome back to Midweek Live Analysis with Prince Wonder. So, as usual, what we're going to be doing on the program is we're going to be analyzing different markets, trying to see how the markets are going to react for the rest of the week. If you're a trader, you know Mondays usually we just have consolidations or really volatile moves in the market. Tuesdays are usually more of a correction for what Monday gave the market, and then from Wednesday we start to see some sort of stable move for the rest of the week. So starting to trade midweek is actually something that a lot of traders do. So this program is designed to help you trade for the rest of the week, know the market outlook for the more stable part of the week, and how exactly you can make the most of it. Okay, so my trading view crashed a second ago, so I'm still trying to reopen it. So as usual, we're going to be going crypto and forex markets, talking a bit about both. But before I start, let me explain or let me talk about something that I believe is absolutely important for every trader: risk management. Risk management is something that a lot of people have come to neglect and overlook, maybe due to the amount of discipline that's required to keep up with it or to maintain it or for it to work for you. But regardless of how stressful or the strain required or the strength or emotional intelligence required, it's absolutely important because it's what's going to keep you in the market. Trading is a business. Whatever type of trading, whether we're trading forex, trading crypto, or trading pepper, or trading tomato, trading is a business. We buy low, sell high. Now, a lot of the time, or some of the time, we're going to buy low and probably sell lower. At other times, we're going to buy and sell at a break even or sell with a little profit. So we need a management system in place to keep us profitable in the market. Let me use tomato now, for example. Tomato is a perishable good, right? So as a tomato seller, very frequently you're going to be having tomato that are left over and they may go as long as maybe spoiling, we're getting rotten. So do you throw away this merchandise, this thing that you bought with your money? No. They dry them out and then they resell them cheaper, but they resell them and then they get a portion of their capital back. So as traders or financial market traders, that risk management aspect is never going to go out of the equation. So you need to understand what exactly you're getting into, understand the instruments that you're trading fully. I'm saying this because I had a risk management class with a student of mine last night, and I don't know, it just joggled my memory, and I talk about risk management a lot. Maybe not as much these days, but I talk about risk management a lot, and I just want you guys to this is just a refresh, a pick me up. Don't ignore risk management. It's what will keep you profitable in the market. Beyond all the technical analysis, the fundamental analysis, all the emotional intelligence and all that stuff, it's risk management that's going to keep you profitable in the market. You don't go in blindly. It's not every trade you take. There are trades that don't meet certain parameters that you should run away from. So you should have a risk management strategy in place to govern your trading, to manage how exactly you go into the market and out of the market. Understand who you are, what kind of trades fit you best, and only seek to trade that which makes you comfortable. Because some people are not comfortable taking huge risks, but they want to scalp, yeah. In order for you to be a short-term scalper or a day trader, you basically have to be taking a lot of losses, in a short time frame, even if it's small money. But that the amount of trades you're taking in a small period of time basically makes it your risk tolerance has to be high to accommodate that. Yeah. So you need to understand your risk appetite, your risk tolerance, how much you're willing to lose, and all that kind of stuff in order to be the best kind of trader that you can be. This is why nobody can tell you this form of trading is not good, that form of trading is bad, or whatever. It's entirely up to you to decide what kind of trading best suits you. Okay, so enough of the hibble. Let's jump back into the market. So we're going to be starting with BTC. We're going to be starting with Bitcoin, my favorite Bitcoin. Now, as you can see, I've highlighted a higher high, higher low trend on my chart, although we seem to have hit a snag on the resistance up here at 24,000. I believe I mentioned before that should we break above 24K, we're undoubtedly heading to 27,000, and this is still Y. Okay, so this is still Y. We're at a key support level right now. We didn't break that zone and we came back here. We're still at the support trend line, and we also have a major support down there. So really not seeing much of a bearish continuation on Bitcoin, say below 22,000. I'm not expecting that much. Okay, so we could still drop to 22.5 and stuff like that just to really retest the support. Not necessary, but that could happen. So from here, we'll probably head back up to 24,000, and then should we break above this zone, it's smooth sailings all the way to $27,000. So in order to trade Bitcoin, it's relatively simple. You just have to watch those key levels. You could take a position here right now. The RR on this trade is actually very good. You don't need any serious confirmation in order to trade this. You just have to buy. Yeah, you don't need any serious confirmation to trade this. So support, stop loss down there. If you're willing to wait, you can basically just put your target all the way up there. You see we have a good 1:3.3 on this trade. If you're willing to wait, if you can wait, it's going to do you a whole lot of good. So, but like I said, some people trade differently. Yeah, you could be a short-term trader, mid-term trader, scalper, and all that kind of stuff. But identifying the general trend in the market gives you an idea of what's going to happen, and you could break that down to smaller moves if you don't want to take that one move. Yeah, you could break it down to smaller bits and take consecutive positions while the market trends, or you could simply just take a single position and ride the market up. Now, in the case of Bitcoin, analyzing Bitcoin gives us a unique insight into what alternate coins are going to do. Yeah, so if Bitcoin is bullish, we're almost certainly bullish on alternate coins. So all we have to do is Bitcoin is bullish, we check out alternate coins to see which of them are at a good place to buy, a good place to enter the market. So from knowing what Bitcoin is going to do, we pretty much have a trade on alternate coins. Okay, so my trading view is gone again. I don't know why that's happening. Let me try to reopen it. Okay, so we can look at the rest of the market. Okay. All right, so I trust everybody can see my screen. So at this junction, as usual, I usually allow you guys to send in the coins, the pairs you want me to analyze. So please do that. Send in the pairs you want analyzed, the currency pairs, crypto for now. So send in the crypto pairs you want analyzed, and we're going to be taking a quick look at them, having seen what Bitcoin is going to do. Let's see if those alternate coins are at suitable entry positions, and then we can trade. Okay, so before that, I have a couple of alternate coins I do trade myself, so I'm just going to be taking a quick look at them while you send in your questions or your pairs you want analyzed. Okay, so ICP has a very good risk to reward ratio right now. Definitely can take a buy at the support. The stop loss is really tight, so take profits. You can zoom all the way in there. So yeah, like I said, it has a very good risk to reward ratio, 1:3.22. So you could definitely take a position on ICP right now at 7.7. The risk on this trade is just 3.5%. So it's really, really, really juicy actually. So ICP is definitely a good one to take in right now. Solana has been very volatile recently, as you can see. This one isn't really at a good place to buy right now. So maybe if we should see a bearish continuation down here, we could take a position on Solana, but I really wouldn't be buying where it is right now, saying as there's a good chance we could have a bearish continuation as it has broken below support. Okay. You see, analysis usually isn't very complicated. It's simply support, resistance, where's the market as what has the market been doing, how is the market trending. These are charts I work with on a daily basis. Really in tune with what's happening. So just a look at the market and what I know about this pair, I'm simply continuing an analysis rather than starting one from scratch. Okay, because when you start from scratch and have to identify my support, resistance, and all that stuff, but as you can see, all of this is already on my chart, and I'm simply just going with the flow of what's already there. Okay, so I see a lot of people tend to clear their chart after every analysis. Personally, I don't recommend that, seeing as an analysis is a continuation of what you've done before or what the market has done before. So if you've analyzed a particular pair before, there's no need clearing the chart unless you feel like something's wrong on this particular chart and then you want to try a different perspective, then you can clear the chart and reanalyze that market. So as for AVAX, AVAX has been doing very well recently, too well actually. It's scary. Considering their fundamentals, it's really not all that far-fetched. But because of the bear market, I've really not been paying too much attention to fundamentals of any pair really. So when they rally, I just chalk it up to good graces and leave it at that. You know, we have a massive channel here, but I'm trying to see if we have something closer to the market's price. Because this doesn't really relate to that. It doesn't really relate to the current market price. Let's see. Okay, so we have this massive channel. We tested the top of it, similar to Bitcoin really. So we have a pullback and we are at a major support. So from here, we could almost certainly see a bullish continuation. The next resistance is up here. I don't think $29 is going to hold it if we do bounce from here. So this is a breakout retest, although we still have a larger trend, which is a trend line, the channel that we're trading that's still keeping the market down. So my next target will most certainly be retesting this resistance and not a breakout of it. So likewise, it has a decent risk to reward ratio, similar to ICP. So could almost certainly take a trade on this one. Yeah, and not be too greedy, too stingy with the stop loss. If you're too stingy with the stop loss, you might end up being stopped out and the market will still continue. So we have a good 2.19. You see, I'm actually not even being stingy with my stop loss and I'm still getting good risk to reward ratios. A lot of people want to force the market to give them good IR or have massive IR so that they can display I'm trading 1:13, 1:2. Now, 1:2 is good. Allow the market room to breathe. Allow the market a good amount of space to breathe. If the market hits my stop loss the way I set them, this trade is completely invalid. It's not coming back. The market is not bouncing back to anything. It's almost certainly not coming back. And that's the idea. If my stop loss is triggered, the trend I'm trading is invalid. Okay? But a lot of people, their stop loss will hit and then they'll be looking for a re-entry without even seeing, they just have no concept of the trend they're trading. To them, they're just buying, they're selling, and then they put a tight stop loss should the market start to retrace. But in truth, what you're looking for your stop loss is a trend invalidation point. Where does this trend I'm trading become invalid. But to do that, first you need to know that you're trading a trend before you start talking about the trend's invalidation point. Okay, so let me just this is for AVAX. I see no updates on the Telegram group, so we're just going to jump into the Forex markets. So I ran a quick analysis on gold yesterday. We're taking a sell from this zone, probably back down here, but it doesn't look like it has played out yet. So we're just going to work with that and we'll just follow up and see. So personally, I don't trade gold much. So I'm more of a currency per person, less of commodities. So Euro USD has been consolidating within the same range for virtually a month now, 3 weeks plus really. It has been consolidating within this orange zone that's on my screen, and it's becoming very disturbing. I don't know if it's just me, but it's becoming very disturbing. But lucky for us, we've started to make higher lows. So hopefully this could translate to an increase in buy pressure, because I'm actually bullish overall on Euro USD. So I probably want to take that as a sign that the market is bullish. And we had a symmetric triangle. We had a symmetric triangle, broke out of it, retested, and we could see possible bullish continuation from here, probably all the way back up here as usual. The main problem comes when we get here, trying to see if we're going to break out or not. So I can't really say for sure if we're going to break it this time around or not, but we could just break down our moves and trade the smaller moves in this case. So we could just buy here and take that bullish continuation. But personally, I won't be buying here, saying as the stop loss could be a little wide. To be a little wide. You see, your eyes as a tool cannot be underestimated as an analyst. No matter how good you are, it actually still gives us a good risk to reward ratio, 26.4 pips stop loss. So your eyes cannot be underestimated as a trader, because before you draw anything, before you do anything, you have to see it first. Yeah. So all the screen time will taken, all the analysis, the backtesting, and all of this is simply to train this to see better. So try your best not to neglect practicing. I've gone through thousands of charts, and so it makes it really easy for me to just pop on the chart, see what's there, draw what I do. A lot of people I know would have drawn this trend line like this resistance trend line. They would have done this. It wouldn't have been wrong. But the truth is, I'm not looking at what the market is doing. I'm looking at what the market has done. Okay, so retracing the footsteps of the market, you see, this is an uptrend, downtrend, up, down, breakout here, no momentum to push further, a pullback, retested the trend line, and a bullish continuation. So this is almost certainly where the market used this particular trend line. This just formed afterwards. Okay, so backtesting and being in tune with the market, your charts, basically gives you a unique insight to how the market moves and how you interpret the information that you see. Because as traders, as analysts, literally everybody has access to the same information, but how we interpret it differs based on our understanding and our own personal outlook. So you want to train yourself in a particular system that will remain consistent to you. I've been doing this for years, and the same way I do it now is the same way I've been doing it for years, and the same way I'm going to continue to do it. So the way I interpret my information or absorb is not going to change, and that's the same consistency that you need to achieve in order to be a better trader, a better analyst. Okay, consistency in belief, system, and action. Belief, system, and action. So for GBP USD, this one is a straight out buy. I'm not complicating it. We're just going to take a sweet buy. Probably not too far, just all the way up there. The risk to reward ratio really isn't all that juicy, but 1:2. Some people might be comfortable with this, but I'm not trading anything less than 1:5. 1:1.5, sorry. I'm not trading anything less than 1:1.5. mostly 1:2, but occasionally we have to make compromises when the market is in. So I wouldn't be trading this. You don't have to trade all the time. Sometimes you just have to trade and just flow. So guys, yeah, you should send in your. I see someone asked for other USD to the cryptocurrency market, and express as soon as I'm done with this as perspective on that. Lagging recently, it doesn't load as fast. I mean, really, there's that delay. I think over the last 2 days. Okay, let me see if I can pop in on Ada. Ada. Okay, so let's work on Ada first. Okay, that has been about a week now. Actually, I don't trade. Doesn't look like we here, seeing as we seem to actually bottomed out here. So probably other question, but you could actually take a from where the market is right now and just place your stop loss. It might not be a bad idea, but personally, to see the market bottom out first before I move, but seems to be bullish, so may just make a personal decision on this one. Comfortable with where it is, right? Move back down here. Okay, some sort of assurance. The market consolidates a bit more before I take a buy. Okay, so back to G. Okay, charts to load. Okay, so clearly now not a good place. Plus, RSI is looking a little confused. So, RR is already bad. Let's see what happens. Stop loss up there. So, not a good one. If you can get a better end, it might be worth gambling and taking a sell, but from the it's not worth it. This is what I'm talking about risk management. If the odds are not good that the market is actually going to play out. Two, the risk to reward ratio isn't even good. So what trade? I rather just chill. Trade not a finish. Yeah. So for today is going to be seller, US seller. So let's just run it. So this has been on Binance. I think it's my network. No. You see, sometimes it's good. That's why I tend to zoom out, just get a grasp of the general trends become invalid and such, and give has been happening in this market over time. Okay, seems like it leans to. This was a key reason. Right now we just have that there. So if you just use that. So now for the major moves, the 0.2 for a while. Now, as you can see, and then right now we'll have a resistance at 0.24. So we have a resistance up there. We had a see the market is consolidating down here right now. So we could take it way back to that resistance. There's just one thing firm first. Still good RR. There's just one thing I need to confirm. Price. Although a lot of those, so probably not find a lot of information here right now. Okay, yeah. So we just take a buy back up here, and if we do break above, we're going to be seeing a really good move up to 2 points. Ifs and maybes is because I don't know information I have available to me to predict I don't know if I'm taking a trade. That trade has a risk attached. So either way, I'm making a decision and I'm taking. This could happen, that could happen. So I'm just taking a position to see first. Okay, which one seems more likely? Is it what doing that? But right now, the most likely scenario is the market to 0.024. So that's the more move with a 2.6% stop loss. But if you want 7, you could end up with 24% that resistance. Although the past trend in a new area, and we could actually take that position and wait. You probably have an RR or same stop loss. That's actually what I would have done. These are then they play out. Yeah. So, but before it does that, the market could consolidate a week, 2 weeks before it gets to where it's going to another. Just ride those smaller moves. Takes you over time. For this week, thank you for coming out as always. To trade, it's at your discretion. Just manage risk. If you missed any part of this, you can always rewatch the video on YouTube. So you could always rewatch the entire video on YouTube. The trade analysis, like if you should use it or just to pick yourself up. And now we have a lot of information that have been